Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And I have some exciting news for everyone today, because for the next few weeks, we're going to be doing something a little bit different with the show, putting a pause on the ongoing Becoming Buffett series we've been doing in the podcast, because on June 27th and 28th of 2017, just a few weeks from now, we're going to be having our mid-year DIY investing summit in partnership with Seeking Alpha. And it's going to be an exciting summit. We're going to have a lot of some of my favorite investors from Seeking Alpha are going to be a part of this summit, and we're going to have all kinds of topics, everything from what their favorite picks are, specific favorite investments are going forward from here, how they're shaping their portfolio for the second half of 2017, how they're hedging their portfolio in light of markets being at all-time highs, as well as how they go about identifying major trends and how do they identify companies to invest in, how do they research them, how do they make buy and sell decisions, all that stuff and more. So I hope you enjoy this preview of the DIY Investing Summit, and you can register for the summit for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com for your free registration. Well, hey, Mark, welcome back to the DIY Investing Summit.
Hi, Brian. Thanks. I'm glad to be back.
How do you go about analyzing trends and then filtering through companies and opportunities?
Well, I think for let's sort of focus on the AI trend. I think what brought it really to my attention is one of the things that I do is follow the various developer conferences that the major technology companies that are also software companies or operating system companies offer to their developers every year. And that includes Microsoft and Google. And I don't follow too much what Amazon is doing yet, but I knew that they had a lot of AI-related activity. But just following Microsoft, Google, and Apple as the three major personal computing operating system companies. Because right now, personal computing is kind of divided between Windows, Android, and iOS. And two of them are mobile, right? What they were doing with AI was what sort of, in my mind, made it clear that this was going to be an important trend. And the what they were offering developers by way of tools, which are usually called APIs, in developer speak. Application programming interfaces is a very technical term, but it basically means it's little code snippets that you can put into your program that perform a fairly complex function for you that you'd have to write a lot of code for if you had to do it all from scratch. So when I looked at the APIs that these companies were offering, I realized that they're not just building AI capability for themselves to offer through their services. They're building AI capability so that any developer can come in, use those APIs, and build an AI-enabled app that would run, say, on Amazon's cloud service or Microsoft Azure or Google. So that realizing that process was going on, and then realizing that had been really instrumental in driving the mobile device adoption was when developers could get in there to the device and actually start building apps for the device rather than just the companies themselves. Like when Apple sort of threw open the gates to iOS development early on in the history of the iPhone. When I saw that process taking place, that sort of alerted me that this was going to be really huge because it had been really huge to enable developers, third-party developers in mobile devices in general, whether for Android or for iOS. So that was an awfully big clue. And then the other major sort of development was what was going on at NVIDIA in terms of enabling the kind of AI features and functionality that that the cloud service providers were starting to make available to developers, but enabling that in terms of hardware and specifically putting it on GPUs. And it just turned out that, as luck would have it, GPUs were extremely well suited for doing an awful lot of AI type and AI related computations. So that made NVIDIA become much more valuable in my eyes. And it showed me that there was a market there for their GPUs more or less in advance of what analysts realized. And this is going back to roughly a year ago. And I think at the time, analysts didn't really realize how big the potential data center market was for NVIDIA's GPUs. But I thought the AI would drive adoption in the data centers, and it has. And their growth in the data center has just exploded. I think for the most recent quarter, their data center revenue was up over 100%.
Wow,
year over year, well over 100%.
Well, what I hear in all this that I respect a lot is, first of all, you have a lot of background expertise in this industry, and so you're able to, even obviously the language you're using and the insights, you've got a lot of high context that you can filter through this and be able to see. But then in addition, you did primary source research. Like you weren't even reading like investing sources. You're looking beyond that to like, who are the end users or future end users of these products, and what are they doing, and where are they investing their money and resources and their people, and piecing those things together, you saw significant trends. But then then I guess the magic part of that, or the wisdom part of that, was then being able to project the implications of those trends, like you mentioned, the data centers and other things. That's pretty cool. Are there, so obviously it sounds like AI is one that you're very optimistic and excited about now.
Oh, yeah. I think there's going to be tremendous work done. I don't know that we can necessarily anticipate all of the potential product applications of AI, but pretty clearly there's going to be a cloud-based AI, and cloud was natural just because, well, doing AI is kind of hard and it takes a lot of processing resources, and cloud services have thousands of computers, thousands of processors going, so they're appropriate to try to tackle that. But we're also seeing AI move into successively smaller packages and smaller devices, and I think that's going to be a key driver of mobile device processor development for probably the next 10, 20, maybe more than that years. People are going to start carrying around AIs in their pocket. They're going to start carrying around AIs in their automobiles.
And by carrying around AIs, mean like devices with AI technology or uses, like a.
Yeah, exactly.
I mean, so obviously, smartphone is an easy assumption there, and
it's going to be a really smart phone. It's going to be much more smart than it is now. Yeah, and it's not going to be.
And I guess probably blending a lot of that with wearable tech and stuff too, which is still, it's been talked about for a while, but still struggling to kind of turn a corner.
Yeah, I think wearable tech is just in its very early stages, and because it's very early, it's not quite as compact and as capable as it really needs to be in order to drive widespread adoption. I think for wearable tech, the AI is probably always going to be in the cloud, but the wearable tech, I think by the time we get to 5G, which is a whole nother topic that we could probably spend a couple hours talking about, but by the time we get to 5G, wearable tech sort of comes into its own and becomes much more capable of supporting cellular connectivity than it is right now. Right now, we're just seeing some very early attempts at cellular connected smartwatches.
And that's significant because, like you said, with the wearable tech, if the AI is in the cloud, you've got to have a really strong bandwidth.
You got to have a good connection. You've got to have an always-on connection, and it has to be based on cellular. But the current cellular system isn't really optimized for wearable. But the people who are thinking about the next generation, which is 5G, they're thinking very seriously about how to support zillions of very low power devices, including wearable devices, and integrate them into the network in such a way that it reduces the power requirements on the devices so that they can have tiny little batteries and all day or multi-day battery life, and no one will worry about that. But that's, I think that's kind of what's holding Apple back, as a matter of fact. Apple could build an LTE connected Apple Watch if they wanted to, but I think they just don't believe that the technology is mature enough yet.
Right. Interesting. Yeah. So tell me this. So obviously, and sticking with AI, when I hear people mention AI, and you think, people say, so big winners will be Google and Apple and Amazon and Microsoft, and it's like, well, I feel like those are. I'm not,
and NVIDIA.
And NVIDIA, yeah. Well, yeah. But people especially mention those big companies, which I would not argue with at all. Obviously, they're huge, big leaders there. But, the idea of course, Apple's had a really strong run recently. But, seeing Apple double or triple from here in next few years, it could totally happen, and maybe it will. But, when you think about exciting tech trends, you really want the NVIDIA opportunity, where you had that company that can go 300% in a year. What do you do when you identify that trend, and then you identify maybe some quote unquote obvious winners like those big players? How do you go about identifying, and again, whether they're micro cap or just smaller companies in general, small cap companies that, are really poised, but they're going to be a little more speculative because it's like, they're not proven yet. Like, how do you filter down to that level and find some of those winners?
Well, I think, size makes a difference. And I think NVIDIA, in the case of NVIDIA, they were like just the perfect size. They're like only about a tenth of the market cap of Apple, but they're still large enough that they've got some gravitas and significant revenue and profitability that they can bring that to bear on technology development problems that they want to solve. And they can do it and remain profitable, and they don't have to borrow a lot of money. And it's, you don't have to hope for a turnaround because they're always profitable. I definitely, one of the criteria that I have is profitability. I don't want to wait. I don't want to hope for profitability. I want I want my profitability, and I want it right now. And so they need to be profitable from the get-go. And they can be small. I think IPG is an example of a fairly small company, but I'm not comfortable investing in companies on spec, on the hope that at some point in the future, if things work out right, they'll be profitable. So profitability is an important criteria. The technology has to sort of be there, and they have to be leaders in that space, and unqualified leaders. When I go through the tech eval process, it's a sort of a multi-level process of evaluation. And one of the steps in the process is a competitive evaluation, where I don't just look at that company. I look at all its peers. So when I research a company to see whether it's a good investment, I don't just research that company. I have to know what the context is, what the competitive context is. So I research all its peers, and I see how that company stands with respect to its peers. And if it's number one, if after I do the competitive assessment, if they're ranked number one, then that's an important go in the process of evaluating them for an investment. It's not the only evaluation criteria by any means, but it's an important first step. And then there's also looking at a series of financial metrics, and then finally I come up with essentially a roll-up grade that incorporates competitiveness, financial strength, profitability. I do a price target calculation to see if there's some near-term upside.
Well, I hope you enjoyed this brief interview preview from the DIY Investing Summit. And if you enjoyed anything about this and found any value in it, I assure you, you will thoroughly enjoy the full interview. And you can register for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com. And free registration, and then the summit goes live on June 27th. And so look forward to seeing you there. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.